So when you come here on your phone, is different setting. Like you're not gonna see this on your phone. It's a different setting to do it on your phone. But if you set it on your computer, you'll be able to see it'll show up on your phone. So you don't as long as you logged into the same TradingView account, you're not gonna have to switch the candlestick. If you log into the same TradingView account on your phone that you is on your computer.
Okay.
So you wouldn't have to change it. So once you change it to Hakanashi, you're not gonna have to change it. But with Hakanashi, you're able to see more order blocks than you do with traditional candles.
Mhm.
How it's don't look at 1, 2 order blocks here, as opposed to when you switch to Hakanashi. When you switch to Hakanashi, you actually see the other order block, the
The
bullish.
order blocks.
Yeah, the bullish order block you didn't see,
Okay.
which is these blue ones here. You didn't see those on the other one. So I want to go over like y'all finding entries and exits. So when you're looking for your entries and your exits, when you're looking for your entries and your exits on during the week.
I got a question.
Yeah.
How y'all doing?
Hey, how you doing?
Space.
I'm all right. I'm all right. I got a question though.
Mm-hmm.
So you know how it don't move like, let's say like Monday, the market don't move and stuff. So do you put your order in and Monday, then it moves on like Tuesday and stuff. Like it start moving on Tuesday. You know what I'm talking about?
Yeah, I know what you're saying. Like, because I'm only looking at the levels. So like once you mark up your week, right? The reason y'all marking up the week is so y'all can see um the true damn brain freeze support and resistance levels. So you marking up from the top down so that you can see the true support and resistance levels. And you can see where smart money is moving, where they're putting in their money at on a higher time frame. Because you're seeing the true support and resistance levels based off from the month down. That's why the monthly resistance level is a stronger level of support than your current weekly. But during the week, that yellow line is your resistance level, your support, your resistance. When it breaks your resistance, then your resistance, your support. But y'all should only be looking at those levels when you're looking for an entry. So this is where patience come into play and using some discernment. So once you have those levels marked up and you know that it sells under here, I'm not looking to take the sell down here at the weekly low. I'm looking to take the sell from the resistance. If it's gonna sell from this level, I'm looking to take the sell under here, under this resistance level to the weekly low. If it's selling, this candle right here was the indication for sell, though, because it broke below the resistance when it was here. It broke below the weekly resistance. But your indication will take the sell from when it's under, when I'm saying underneath the resistance, when it's underneath the midweek resistance area, you're looking to take the sell at that level, at that resistance level, not when it's way down here. When it touches the weekly low, unless it breaks the weekly low and makes a new low, then you're looking to take this back up to the midweek. So how it did right here, the reason this was a buy is because it broke the midweek, it came and touched the weekly low and didn't break. It didn't resist that level. Another confluence to add into that to confirm that buy was this order block right here, a 4 hour bullish order block. right here. It's at the weekly low. It touched the 4-hour order block. I'm looking to take buys at this level. And I'm looking to see it happening on a smaller time frame. I'm looking to see the move forming on a smaller time frame. Like right here. I didn't enter to this candle, but this was it right here. It started right here. After the spin top candle, flat back, that was your entry. Because you seen that it wasn't coming back down to this level. You can set the stop, your profit level. This would have been a TP1, this would have been a TP2 because this is a stronger resistance level. The monthly is a stronger resistance. So because it was selling underneath this and it bought back up from the weekly low, like this, then it was rejecting the mid-month resistance area. So this is where you will be taking your sales underneath here because the selling is happening underneath this point. These levels is here so that you can identify your set. It's easier for you to identify your setups. That once you apply it to your chart, you should be able to identify the setups and see what's happening on the chart. Like I can delete these lines because these are just knowing for me to know when to enter. But if we go back, let me see, the beginning of the month right here. Okay, it's been buying from since the beginning of the month. It was buying from the monthly low. Okay, once it broke this monthly area here, this was about another entry to basically take it to the new month's high. But it goes in between. It goes in between these levels. It buys and sells in between those levels, in between those support and resistance levels. So once those is marked and once those areas once you identify those areas and have them marked up for your monthly and your weekly, you should be able to see your setup. Once your chart is marked up, your setup, you should be able to easily go in and identify your setup. It's not to play a guessing game. It's not to second guess. It's meant once you have this set up, I can go onto the chart and be able to identify where I'm looking to get in at. If I see it's just breaking below the midweek on Sunday, then I'm looking and I see it's not breaking, like it's right here at this level and it's not breaking this level. I'm looking to take sales. I'm not questioning whether or not if it's gonna buy or sell. I see that it's not breaking this level because the wicks, when it's wicking like this, when you see it doing this, that is telling you right now that right there that price is unclear. Price is unclear whether or not what it want to do, whether it want to go up or down. And if it's wicking at an area that if it's wicking and it's not a candle breaking above it, that's your indication. That's an indication for sell. This right here is an indication for sell. When you see it wicking and not sticking, that's your indication to say, okay, it's going to continue in the direction it was already moving because you're not getting a clear confirmation. The clear confirmation is a full body candle. Y'all don't have to second guess yourself. That's mostly your mind playing tricks on you. You don't got to second guess yourself. Once you have your levels marked up, this thing, when I tell you it plays like mechanically, it plays these levels like mechanically. We could literally go all the way back on any chart and you will see what I'm talking about. It plays these levels like a computer. These are Fibonacci levels, so it's like it's repeating these levels on the same thing over and over. If you know the Fibonacci is the sequence of numbers that's repeated over and over that you're going to see over and over in time. And the market just repeats itself. And when I called this one over here this week, I was looking for it to break this order block here. Is when I called for this one on Monday. But your stop loss, you can't be scared of your stop loss. You set your stop loss in a position to where if it breaks that loss, it's not, oh my gosh, I lost. The stop loss is there set in a way to where you're protecting your money. If it goes below that, then that's the market telling you it's reversing. If I'm putting my stop loss under an engulfing a higher time frame engulfing candle and it breaks that level, I'm not hopping back into the same move. Because if it breaks that level, that's the market telling me that it's changing direction. Why am I gonna get back in for another buy if the market breaks below an engulfing on a higher time frame that it took 4 hours to form? Or when you either set your stop below the engulfing or below the order block, depending on where you enter at. Like if you're entering here, you would set your stop will be set. If you're entering like for a buy right here, your stop would have been set below the order block because you're protecting your money. If it breaks that order block, then it's changing direction. So the stop loss is not just how much I'm willing to risk or how much I don't want to lose. The stop loss is setting a stop in place to stop yourself from losing, to stop yourself from taking a bigger loss or holding on to a losing trade. The stop loss is strategic. It's part of the trading. If it stops you out, then that means doesn't mean that you had a bad trade. It just means the market reversed on you and went in a different direction. But y'all have to don't set it. You gotta adjust your lot size. If you're setting it and you're like, oh, I can't risk that much, then it's not the trade that you gotta adjust the stop loss. You gotta adjust your lot size. Your stop loss should be where it's gonna be at, but your lot size is what has to adjust in accordance to how much you're gonna risk. Not you adjusting for a bigger lot size because you want to make more money. It's patience. You're not in it for a quick couple of $100. If y'all in it for the long haul and y'all can't take, you're not gonna be able to make 100,000 if you can't take losing $1,000. That's not even 10%. That's maybe 10%. But 1%? That's 1% of 100,000. But if you can't take losing $1,000, then that's 100,000 is like obsolete to you. It's foreign. If you can't make $1,000 if you can't take losing 100. If you want to get to the like I just made $1,000 in the market, you got to be able to willing to say, okay, I could risk losing $100. Some of y'all don't want to risk losing $100 and y'all want to make thousands. You got to be willing to take the risk and to get the reward. The bigger the risk, that saying, the bigger the risk, the bigger the reward. These are calculated risks. You're not taking a risk of just throwing your money at the wall. And this was the level. I'm actually looking for this to continue up here. This buy on gold to continue. It's been trending up out of and came out of this order block. It broke this order block here. This order block is where you seen it rejecting that here. This is where we took it to here because I knew it was gonna reject once it got into this order block, got into this area. That's why this was the take profit here because when it got into here, I said it was gonna pull back. It did pull back for a day, and then it bought from the midweek area. And I'm anticipating for it to break this area. This is the next order block here that I'm looking for it to break above. Is this 400 level for gold? Because gold's been trending since 2023. The sells is usually pullback. When you look at it from a weekly stance, you see that those are pullbacks because it's been trending up since 2023, since October 2023 or November 2023. Yeah, about October 2023, it's been trending up. You get a few pullbacks, but these are entries to get in for a long hold up, a long buy hold for gold, because gold has been consistently making new highs since 2023. So it's depending on how your appetite to be able to hold a trade and not be scared of the pullbacks. In swing trading, you risk less to gain more. When you're swing trading, you should be lowering your lot size anyway. You should lower it. If you're gonna hold a trade for for longer than a couple days, you should be lowering your risk, lowering your lot to be able to hold a trade. You should be lowering your lot size to hold a trade for a longer period of time.
Lot size for 100,000 would be what?
On a 100K account, you can lower it to like a full lot size. Typically, if you're doing a twin trades, you can do 2.50 lot sizes, but on a swing, you will cut that to 0.25 if you're doing twin trading. Like if you got a 100K prop, you would do 0.25 because you want to lower the risk, especially like in one, you got to have a prop that lets you hold. EA does let you hold the trades overnight and over the and during the weekend. So if you got a 100K prop, you want to lower it to 0.25. You want to trade that 100K prop like you trading a $50,000 prop if you're planning on holding a trade for longer than a day.
Gotcha.
So that's why you got to lower your risk when you're holding it for longer periods of time because you got to anticipate the pullbacks. Like if you was holding gold from here from Tuesday and you would have held it throughout the week or started holding it on Monday, you would have still been having to like have your risk lowered based off of these pullbacks. These are pullbacks. And on gold, that's a strong pullback. But if you already set into profit from Tuesday, then these pullbacks shouldn't bother you. And especially if your risk is not as high, then you're not worried about the small risk on a pullback. So you lower your risk based off of what if you're anticipating to hold it. If you're getting in a trade at the beginning of the week, and I'm saying that there's buys going to happen throughout the week, you can get in a trade and hold it throughout the week. Just lower your risk and anticipate the pullbacks. Like Bitcoin making a new all-time high that I said it was going to make. Did anybody catch that at the beginning of the week? Because this thing definitely went to the all-time high, 112. This is the entry on Monday. This was the entry right here on Monday. This is the second entry on Tuesday. I didn't take an entry on Wednesday. And on Wednesday is when it took off to make the new high. But on Tuesday is when I was telling y'all that it's gonna make a new high. Let's say. See, yeah, entry patterns. But it definitely gave you those entries right after 8 o'clock. So you can see, I'm zooming in to see the entry. So that y'all can see the entry. That's when it made the entry right there. The entry pattern here on the 15 minute. This was your indication for entry when it started buying here. This is another entry here. This was an entry and this was an entry. Because it didn't come back to either one of those entries. Until the next day it came back to entry here on the midweek area. So when it made the new high, it came to entry right here. And right here, this is an entry. When it bounced out of this order block here, that was an you could have entered on the next candle. But if you're following the trend, but you shouldn't trade against the trend. When you're trading against the trend, you're gambling in the market. Did my chart just disappear? Okay, there we go. Now, Bitcoin did come into a weekly sell order block. Where's my chart, yo? That it just brought past right here. We're inside of a weekly sell order block for Bitcoin that it just bought past. No, I don't trade Bitcoin I wouldn't anticipate trading Bitcoin on a weekend because we got a lot of sideways action happening. And we do got it rejecting the high right now. So we would definitely be probably looking for sales next week for Bitcoin because it's rejecting a high to see if it's going to continue rejecting a high. So we want to wait for the new weekly candle because after it makes a new high, it got to come down and correct the previous low. So real quick, is there anything that y'all having trouble with as far as your entries and your exits that y'all need help with that we need to go over? If it's something that y'all need help with and y'all need clarification on, that y'all need me to touch base on, let me know and we can go over it now. Okay, no question. Jazz,
Just on when to enter.
okay.
Confirmation.
So your entry confirmation is
So I remember I was talking to you this week,
mm,
and you was telling me I need to go back and look at my trading plan as far as the confluences, and
do
I
you
haven't
have a
done that
copy of the
yet.
trading plan?
Yes, I do,
Uh,
but I haven't done that yet. But if you could just I
do it.
guess give me some clarity or just help me open my mind a little bit. So when I do start going through the confluences of the trading plan, then I'll be more understanding of what's going on.
Okay, I'm gonna pull a trading plan up side by side so we can see and how you will use it. Give me a second.
That's good.
Let me pull it up. Hold up, I'm pulling it up. Give me 1 second. I'm gonna pull up that, and then I'm gonna pull up the chart side by side so you can see what I'm talking about. When you, so you can see the plan now, and you can see the chart. You can also so when you're looking at your checklist right here, this is how I'm saying before you enter the trade when you're using the checklist. So if I'm looking at this and I'm looking at my chart, I got my pair pulled up right here. Okay, and I'm following the checklist. Have you analyzed the weekly, daily, or 4 hour chart to locate your higher time frame value area? Okay, so the higher volume time frame comes from up here. This is something that should already be checked because this is where you marking up the chart at. Validate market structure. Has the higher volume area aligned with the key support or resistance zone, i.e. the weekly and midweek levels? So is it buying or selling from those levels? Okay. This is the stuff you're looking for before you enter. Is the evidence of buyers or sellers dominating the market? So the evidence will be, is it below or above these levels? If is it below this level, I'm looking for sales. That means sellers is dominated. Is it below this level at the weekly low? I'm looking for buyers to come in and dominate it because it's in this area. Has price retraced the higher volume area before moving out or breaking away from? Has it came in here? Have I seen it come into this area and not break it? Right here. Are there rejection wicks, engulfing candles, or other price action signals confirming? This is the rejection candle right here. That's telling me that I'm looking for buy because it's rejecting this level of support. This is a long rejection wick that came in and basically grabbed liquidity. That's indicating for me to sell. Are there trend line Fibonacci levels or other traditional supporting factors supporting your trade? Your trade setup. Is price action aligning with a clear uptrend or downtrend? This is where the trend line is. Is it not breaking my trend line? I don't have a candle coming above my trend line. Like there's not a clear 4 hour candle coming above my trend line. That's it aligning with my trend of an uptrend or a downtrend. So as long as it's below this line, it's a downtrend. If it's above this line, it's an uptrend. So it's clear price action telling me that it's an uptrend or a downtrend. Are market conditions in your favor for trading, i.e., news, events, in your favor for your trade direction? Now, the news will typically move it from the direction of where it's at. So if it's at this level and it's already showing rejection, and then news come out, it's gonna just move it up into the direction that you're anticipating for it to go. That's why I can trade the news. I know if it's in the area of a support and resistance, a weekly level support or resistance, the news is only gonna move it into my favor. So typically, I don't worry about the news as far as market sentiment is concerned. That works in favor of my trade. Is your stop loss position above or below the higher time frame area or a significant swing high, swing low? And does it offer at least a 2-to-1 risk ratio? If you're taking it from one level to the next level, it should always offer more, at least more than a 2-to-1 ratio. If you're catching it at the weekly level of support or resistance, and you're taking it to the from one support, and you're trading in between the support and resistance, and you're taking it from one level to the next, it's typically going to give you a higher risk to reward ratio. These are the things you're checking before you enter in the trade. Emotion check. Are you calm? Are you focused? And are you not chasing the trade? This should always be in check before entering the trade. You should always be calm and focused and grounded before entering the trade. You should always be calm and focused before entering the trade. Have you detached any emotional outcome to the trade? Are you anticipating this trade? If I lose this trade, I'm not gonna be able to pay my rent. I'm not gonna be able to pay my car note. This is what's riding on it for me to double this money. If that's what you're doing going in the trade, you have not emotionally detached from the trade. You shouldn't be trading if your emotions are attached to the trade. If you got some emotionally attached to it, you're gonna make emotional decisions in the market. Does this align? Does this trade align with your defined trading strategy and rules? These are the rules that you should be following. So all your setup should align with the strategy. It's coming either from this level or this level, above this level or below this level. That's what you're looking for. It's not complicated. It's below this level. I'm looking for sales from the level of resistance. When you get to the level of support, if it's not rejecting, I'm looking for the sell to continue to the next level of support. If it's rejecting, then I'm looking for it to buy back up. Are you entering during high liquidity session? The highest liquidity sessions are London and New York. So if you entering outside of those time frames, then you're entering in like in consolidation or pullback times. Is the market currently exhibiting clear, predictable price action? This is clear price action. When you see these flat, that's a clear price pattern. The Hakanashi, when it has no wick coming from it, as long as it's printing those flat bottom candles, that's clear price action. When it does these wicks, that's unclear price action. Clear price action, 1, 2, 3, clear. 4, clear. Unclear is the wicks. So as long as you see it printing those candles on a higher time frame, the higher time frame rules. Fuck what is happening on a lower time frame. If it's happening on a higher time frame, the lower time frame is basically like playing catch up. So this is telling you that this clear sell action when it's printing these flat bottoms with no wicks. The flat candles with no wicks is indicating it helps you determine the trend and the way that price is moving. And with Hakanashi, I know it measures the average, but it's measuring the average based off of the direction that the market is moving. Are your stop loss and take profits entered before executing the trade? Have you noted the reason for your trade? You're entering your exit points, your journal. So when you journaling, you should be saying why you're taking this trade and not just I just feel like this is a good setup and I'm just hopping in. No, I'm taking a setup because I see this pattern. It made the pattern that I was looking for. This is why I'm taking a trade. The journaling is important. So you journal before you enter the trade and you journal after you enter the trade. That right here, post execution for your trade, like why you took that trade. Okay. To ensure your trade approach is strategically reducing impulse and decision and enhancing consistency, use the checklist and only take A and B setup. A being that it checks everything on this checklist. Like I can feel good going in. I can go through this checklist. Everything on here is checked. Okay. 5 and 6 should always be checked. That's your trading psychology. That should always be checked before entering any trade. B is it checks at least 5 of the things off the checklist. C is it's 50-50 and you should only be taking A and B setups. Like before you enter it should at least have a checklist right here. A B setup would be it checking at least 5 of these things on this list. An A setup where everything on this thing checks out, I can go in and I can comfortably take this trade and not feel good going in. If you just stick to following the plan and following the trading plan and only taking trades that align with your confluences and your setups, you're not guessing. You're not wondering if I should enter the market or not. It takes the time out for you. It helps you to take the time out to relax and trade with patience and precision when you're following the plan. And if you also just following a plan, it helps you to build consistency in your results and what you're doing. And you're not just taking frivolous setups. So this is why actually did you have the plan, the trading plan, and also the trading plan also has your discipline notes that you follow, your golden rules that you would set right here to trading, as in saying, listen, I have a rule that if I lose anything more than $500, I'm closing my computer. Or if I'm lose more than 3 trades in a row, I'm not trading for the day. Put that up and put it, if you have the trading plan, print it out somewhere where you can see it in a spot where you're going to be trading at, that you can see that. So you know, as a reminder, that I lost 3 trades and you're not going in revenge trading right here. This is my rule. Stick to your rules. You will feel better with yourself as a trader sticking to your rules. And it also builds discipline when you stick to your rules. Okay. And in the beginning of this trading plan, it talks about the days that you trade, which is not every day that the market is open. You shouldn't. The more you're in the market, the more chances you got to lose. It's best if you if you pick the days that work better for you. You will know what days work better for you if you writing it out. If you're journaling, you will know that I have good days on Mondays. Monday is usually a good day for me, or Friday is sometimes a good day for me, or this days of the week. These 2 days right here is good, works good for me. You will know that. You don't have to trade every session. You will know that I get better results in trading this session or that session, depending on what you trade. But if you have it in front of you and you sticking to just that, if you stick to just following your plan, trading will be a hell of a lot easier for you. It won't be so much confusion and so much you got to question when you have a plan that you're following and something that you could see and say, this is what I'm doing. What pairs are you trading? You don't got to trade every pair. You don't got to trade everything. Find what works for you, what pairs that you trade, so that you're not all over the place. Because you'll be able to study how one pair moves. Like if you commit to just trading the odds, you'll know how it moves. You'll know what things move it. You'll be able to go back and study how it moves in accordance to the different time frames, different days. You'll know stuff about that pair when you stick to trading 1 or 2 pairs. Or just focus on just trading one pair and learning that pair and just trading that pair and practicing trading just that one pair. If you're trading just Bitcoin, if you're trading just gold, if you just trade that and learn how that moves and stick into your plan, you like, and then the next 6 months for you will look a lot different. You would know, you'll be able to easily discuss. You'll know where and why you took your losses. You'll know what's moving the market, what things is happening, how things affect what affects this pair. Oh, news affects this pair in a bad and a negative way. This affects this affects gold when this is happening over here. You'll be able to see that when you're not trading every pair. You always can go in the market and find a setup, especially with this strategy. You can always go in the market and find a setup on any pair. But it's not about taking every trade. You don't need to take every trade. It's about trading what you trade and taking this and applying it to what you trade. You don't gotta trade everything. What are your goals? And your goals is set in place to be able to you not to overtrade. What are my daily, weekly, monthly goals? That don't mean if my monthly goal is if my weekly goal is to make $2,000 and I made 1,998, I'm gonna go back in the market for $2. No. Your goal is set in place to where when you hit your goal, you come out of the market, you don't gotta spend the rest of the week trading. You meet your goals and you come out of the market. The goal is set in place so that you're not over trading and it gives you something to work towards. That you're not trying to catch every trade and every setup. You already met my goals for the week, so I don't gotta trade no more. So you want to put this in front of you, the plan in front of you. Have it printed out and plan it and put it in front of you. While you're trading will help you to stop doing stupid things in the market or help you to kind of bring you back and ground you. When you have a reason why you're doing this, you approach it differently. And you're not just trading and just make money and make mistakes. And making the same mistakes over is usually a master of yourself and a master of your mind. And when you see what in front of you why you're doing this, then it will kind of keep you from doing the same things over and over. And your approach to the market so that you're not taking every setup. Am I a scalper? Am I a swing trader? Am I an intraday trader? Okay. So you want to put this in front of you. You want to have this down, print it out in an area where you trade at or somewhere in your phone where you can see it and where it could be a daily reminder to you when you're trading. Going through the checklist, you're not gonna miss no setups. Okay. It don't take long to go through the setup. Once you already got it marked up, you know right here your checklist of what you're looking for. Just try sticking to the checklist before you enter. And the indication that you're looking for entry is when you come down to a lower time frame. There is a pattern that breaks the structure. That pattern is a break of structure. So when you see that happening in the market on a lower time frame, that's a break of the structure in which the direction in which it was moving. And when you see it happening on a 15-minute, you should also see it forming on a 30-minute. So if I was looking at this for an entry right here, at 9:15 and made that candle, and this was the next candle for entry. On a 30-minute, you should already start seeing it following the direction of which the 15-minute is printing. So what you see starting to happen on the 15-minute, you're just basically catching the move earlier. That's why your entry is on the 15-minute. If you're entering on the 15-minute or the 30-minute, that's your confirmation of entry.
Gotcha.
Okay? Would be the spin top doji candle followed by the flat. Spin top followed by the flat. Spin top followed by the flat. Followed by the flat. Right there, followed by the flat. Okay, so use the confluences and you look for that pattern and you go through that checklist before you enter. If you don't have it printed out, print it somewhere where you can see it so that it's a reminder of you what to do when you're entering. And don't try to trade every pair. Try to pick something that you're one comfortable with trading that works in accordance with your account size, the account size that you're trading. Okay. I don't know how some of y'all feel about props, but if you're looking to trade a larger account, I know there's a lot of jankiness that goes on with some of the props, some of these prop firms, and they like to move the bar on the rules, but the prop firm is actually set in to make the rules are set in there for you to become a better trader so that when you're following the rules of how trading is supposed to be done, only risking 1 to 2% in your account. You're supposed to do that anyway. So when you go to the prop, it shouldn't be difficult for you to pass. When you move over into trading a prop, it shouldn't be difficult for you to pass if you already have the practice of risking 1 to 2% in your account. When you move over to the prop, it shouldn't be hard for you to risk 1% in your account. And when you're trading the prop, you're typically trading the drawdown. So if you're trading a $50,000 prop and the drawdown is $2,000, then you're trading a $2,000 account. If the daily drawdown is $2,000, then you're trading $2,000. If you got a 100K account and the daily drawdown is $4,000, you're trading a $4,000 account. The prop firm that I put in there is a trusted prop firm. They're listed they're within the United States. They're not out of the country. Their withdrawals is verified. I have got withdrawals from them. I wouldn't put no janky prop firm in there. I only put what I use inside the under broker inside the Discord. You will see the ones that I use. And so when y'all using the prop firms, if you're going into use a small account, you might be better off using a prop firm. But don't use a prop firm if you are somebody that over leverage because it's gonna work against you. So if you go into a prop and you already over leverage, you're gonna go into a prop using them same going in with them same bad behaviors of over leveraging. So passing a prop is not difficult to do if you already have those practices in play of trading 1 to 2% on your account. Only risking is sticking to your goals. When you go into a prop, you're gonna just carry on the same rules that you already follow. So I hope this call helped y'all today. Okay, we're gonna conclude it. If you don't got a copy of the trading plan, let me know so that I can give y'all a free copy of the trading plan. I want y'all to have success in trading, and I want y'all to have something to follow when y'all going in to take the trade. So if you don't have a copy of the trading plan, let me know and I'll send you a copy. But use the trading plan as a checklist before you enter your trade. If that requires for you to go and look at your setups 30 minutes before the trade, then go and look at your setups 30 minutes before the trade or 15 minutes before the trade so that you know what you're looking for. And if you already did your checklist, you already went through your checklist, you already know what you're looking for when you go in. You're just looking for it to give it your indication for entry. Okay, so if you already know what you're looking for and you already checked everything on the list, then you know what you're looking for when you go in, go to your 15-minute, wait for an entry and enter. Okay, but it might require for some of y'all to get up earlier. It might require for you to just give a little bit more time with your trading. Okay, try meditation. It definitely does work. Try playing some jazz music, lighting an incense, lighting a candle, setting the tone for where you're at. Give yourself some time and some grace and set the mood for your area to relax. If you want to sit down, have you a glass of wine, have you a joint, roll, light some incense, light a candle, whatever it takes for you to get to your mind mentally stable to where you're making clear decisions, do that to where you're relaxed and you're not thinking about it. You're not putting so much thought into executing. Put yourself in a state of relaxation so that way when you go into the market, you're cool, calm, and collected and you're not second guessing yourself. Okay? So if you don't got a copy of the trading plan, let me know and I'll get you a copy of the trading plan. Go over your notes. I'm going to be posting this call within like the next hour. Okay? Enjoy the rest of y'all weekend. See y'all tomorrow.
You too. Okay.